Buying your first stock can be like buying your first car or home. Overwhelming. Where do you even start? How do you know if it's a good price? Is the seller or the company honest and trustworthy? Whether it's your first car or your first stock, the only way to answer these questions is through research and due diligence. But what does that even look like? Well, my good people, you just so happen to have clicked on the right video and stumbled upon your new favorite YouTube channel. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, family? It's me again, your favorite headless YouTuber with another video that you're not going to want to miss. As always, before we get into the video, let's kick it off with some Monday motivation. You are the root of your financial success or failure. If you work on the roots, the fruits will take care of themselves. In today's video, I'll be walking you through how to go about choosing your very first stock to trade or invest in. If you've been following the channel so far, you already have a pretty good understanding of what the stock market is, what stocks are, what stock options are, and why it is a skill that everyone can benefit from. Now we'll talk about how to go about that very first stock market investment or trade. And for watching the video today, I'll give you one of my favorite stocks to invest in for the remainder of 2021. This surprise is likely to come out at any time during the video, so keep your eyes peeled so you don't miss it. And of course, don't forget to subscribe to the channel if you haven't already and turn on notifications so you don't miss any new content. Without further ado, let's get it. As I'm sure you already know, there are thousands and thousands and thousands of publicly traded companies available in the stock market. So choosing the right one can almost seem impossible, like finding a needle in a haystack, or even worse, trying to find where's Waldo. Not gonna lie, I still haven't found him in this pig, but that's besides the point. The point is, picking the right stocks doesn't have to be that hard. The market is always full of great buying opportunities, even in the worst market conditions. One thing about the stock market, it will most definitely keep you informed and up to date on what's going on in the stocks that you're invested in. Look at it like this. If you bought 100 shares of a company for $500 and then a week later, you see your 100 shares only worth $400, first thought that come to your mind is, well, what happened? How did I lose $100? Now you're on Google, Yahoo Finance, CNBC, and anywhere else you can think of, just trying to find some reason as to why your money decreased.
What was the reason?
Same thing goes on the flip side. If you look and your 100 shares are now worth $700, why you wouldn't be as mad? You still be just as curious as to what caused you to gain $200, and your research will begin. In either scenario, you now know a lot more about the company you've invested in and what potentially makes it move. When looking for your first stock, I always recommend aligning your decision with your interests. Why? Glad you asked. Because you'll be more inclined to do detailed research on the company or industry that you're familiar with. If you just despise the idea of video games, the last thing you'd want to do is invest in a company that deals in that industry, because every article you read to get to know your stock a little better is just going to drive you crazy. It's especially important when starting out to make sure you're excited to find out new things about your company's stock, rather than dying of boredom or losing your sanity. Now, Sensei, how do I find stocks that align with my interests? Now, hopefully, you already know what your interests are, because if not, that's a conversation for a completely different video. But let's just assume that you do. A good starting point would be to choose a sector in the market. A stock market sector is a group of stocks that have a lot in common with each other, usually because they are in similar industries. There are 11 official sectors in the market. Those sectors include energy, materials, industrials, utilities, healthcare, financials, consumer discretionary, consumer staples, information technology, communication services, and real estate. Now, you don't have to memorize every sector, because this information can be easily found through a simple Google search and on any investing app. Okay, so is that all I need to know to invest in my first stock?
No.
Not exactly. While aligning your stocks with your interests is important, it is equally important that the stocks you trade or invest in align with your individual trading plan. Finding the perfect stock is not a one-size-fits-all situation. is more of a Cinderella story. You have to find a stock that fits your specific needs and goals. The perfect stocks for me may not be so perfect for you because we have different interests and investment strategies. We talked about the different investment strategies in our investor versus trader video, so be sure to check that out if you haven't already or aren't sure what they are. The link to that should be at the top of your screen now. I'll also put it in the description below for you. Now, the simplest advice you'll always hear about the stock market is that the goal is to buy low and sell high. Duh. The goal is always to come out with more than you came with, or AKA profit. The thing that most people can't tell you is how. How do you know when a stock is low versus high? One of the most universal ways of figuring this out is by completing a fundamental and technical analysis on the company's stock. These concepts were also briefly covered in the investor versus trader video, so I'll put that link back up top in case you missed it the first time. We will cover the basics of technical analysis, aka reading the stock charts, in a future video. You know what that sound means. You remember that stock that I mentioned earlier? Well, let's talk about it. The stock I'm referring to is Haemonetics Corporation, or ticker symbol HAE. Haemonetics is a global healthcare company operating in plasma collection, blood centers, and hospital solutions. At the time of this recording, they are currently priced at $70.22. HAE took a pretty big hit back in April after one of their partners announced that they wouldn't be renewing a contract that's set to expire next year. One thing you'll learn about the market is that it tends to overreact, and I believe that this is the case with HAE. HAE, following that announcement, fell from $115 to as low as $49 in a month's time. I mean, you would think they were going out of business with a fall like that. Keep in mind that this partner has only decided not to renew one of several contracts it has with Haemonetics. HAE has already recovered a good chunk of what it lost, and I believe it will continue to recover for the remainder of 2021 and going forward into next year. Stocks tend to take the stairs up and the elevator down, or sometimes, like with HAE, the window out. We believe HAE is a good buy under $75 and have a price target of $95. As with every investment, always do your own due diligence to make sure it fits your criteria and your trading plan. All right, now back to the subject at hand. Each type of investor and trader will approach finding the perfect stocks differently, looking at different stock stats or metrics to influence their decision. Let's talk about the most common metrics among all trader and investor types: PE ratio and volume. PE ratio stands for price to earnings ratio, and it is basically a valuation metric that compares the company's earnings per share versus the price of the actual stock. Wait. You mean to tell me that the price of the stock doesn't reflect its true value? No. Not at all. The cost of a stock's shares is reflective of what the market currently believes it's worth. The PE ratio tells you whether the stock is overpriced, fairly priced, or underpriced based on what the company actually earns. So if a stock has a PE ratio of 45, basically what that tells you is that the current price is 45 times the company's value based on what they actually earn. So that would be like paying Tesla prices for a Subaru. The general rule of thumb is that a stock with a PE ratio less than 15 is considered underpriced, and above 25 is considered overpriced. A part of your research will be taking it a step further and figuring out the average PE ratio of your stock's industry. That way you can see how it values in comparison to its competitors. The second metric is volume. Volume, as we've discussed in previous videos, is the amount of shares or contracts bought and sold for the day. Volume tells you a lot about a stock. To keep things simple, here's the volume formula. More volume equals more liquidity, which in turn equals more price movement. Liquidity is a measure of how easy it is to enter and exit positions of a stock. More liquidity is directly correlated to tight bid-ask spreads, which, as we know from part 2 of our stocks and options series, is definitely going to be important in picking stocks to trade or invest in. In other words, the more people trading and investing in a stock, the easier it is to enter and exit positions, which will result in the stock's price fluctuating or moving up and down more. In the interest of buying low and selling high, this is exactly what you want to do in order to lock in profits. Of course, there are so many more metrics that are used in analyzing a stock's worthiness. PE ratio and volume, in my opinion, just are the easiest to understand and identify. Let's recap. When deciding what stock is worth your hard-earned coins, it is important to 1. Align your decision with your interests, starting with one of the 11 industries or sectors in the market. 2. Align your decision with your trading plan, making sure that the stocks you choose will help you achieve your investment goals. And 3. Use metrics like PE ratio and volume to determine the relative value of the stock and its liquidity. Make sure you're tuned in next week because we will be introducing the trader's most valuable tool in the market, a tool that has single-handedly made many millionaires and will probably continue to make many more. Before we close out today's video, just remember, don't be afraid to fail because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of its content is made for you. Thank you for watching this video, and I'll see you in the next one.